Hello viewers, welcome to my channel. Today we are going to see question number 5C of CA Foundation, January 25. This is redemption of debentures and conversion of debentures. A company had issued 20,000 8% partly convertible debentures of 100 each on April 1. The debentures are due for redemption on June 1, 24. The terms of issue is 30% will be converted into equity shares. Nominal value is 10 rupees, but it will be converted at a price of 20 per share. It means it will be converted at a premium of rupees 10, and remaining will be redeemable at a premium of 5%. So you should note this point also. Only the remaining debentures will be redeemed at a premium of 5%. Calculate the number of equity shares to be allotted to the debenture holders at the time of conversion. First thing is that we have to calculate the number of equity shares which are going to be allotted on conversion of this 30%. Second thing is that give the necessary journal entries related to conversion and redemption of debentures, assuming that company has created debenture redemption reserves and also invested required amount for redemption of debentures at the time of issue. So already debenture redemption reserve is created and debenture redemption investment was also there. So keeping it in mind that, assuming that, then you have to do this thing. One more thing they have given, the debenture redemption reserve investment is sold at par value at the time of redemption of debentures. So first thing is that they have issued 20,000 debentures of 100 rupees. So calculation of number of equity shares to be allotted. For easiness, I have calculated already and I am going to explain this. Issued 20,000 8% debentures which are partly convertible. So the total amount of 20,000 debentures of 100 each will become 20 lakh. Out of this, 30% will be converted automatically. They didn't ask for any option or something. They clearly mentioned that the terms of issue itself is saying that 30% will be converted into equity shares. So now 30% of 20 lakh is 6 lakh rupees. Now they are going to allot for this 6 lakh rupees shares, equity shares. But the equity shares are going to be allotted at a price of rupees 20. Issue price is 20. So if you divide the amount by this per share rupee, you will get the number of equity shares. So there is no the thing hard and fast rule. So it is very easy. They are going to allot 30,000 equity shares of nominal value 10 rupees, but issued at a price of 20 rupees with a premium of rupees 10. Okay. Now we will do the working note and then come back to the journal entries. First is this DRR already created, how much they have created, because they say in the question that the company has created the debenture redemption reserve. The debenture redemption reserve is created already. And you know that debenture redemption reserve is created for the non-convertible portion. Because convertible portion, there is no need of any reserve or security. Because that will be converted into equity shares. Only for the remaining non-convertible, we have to the company had created. So we have to find out how much it was created. DRR created, sorry, to be created, not it is created already. For non-convertible debentures is 20,000 total debentures, convertible were 6,000 debentures. So the 14,000 debentures of 100 each for 14 lakh, 10% of DRR. All of you know that we have to create 10% as per Companies Amendment Rule of 2019. So 14 lakh into 10% is 1,40,000. This is already created. So take this as created. Don't take it as to be created. Okay. Now DRR investment will also be created, 15% of the non-convertible portion. So 14 lakh into 15% comes to 2 lakh 10,000. This 2 lakh 10,000 is sold at par at the time of redemption. So they ask us the journal entries for this. You have to keep here one thing in mind when calculating the number of equity shares. In case of illustration number 3 of your study material, there it says debenture holders opted. They have given an option to get their debentures converted into equity shares as per the terms of issue. Only as per the terms of issue, they'll get their debentures converted. What is the terms of issue? The terms of issue is these debentures will be redeemable at a premium of 5%. But if you opt for equity shares, then they will redeem it, remaining debentures, and the other debentures will be converted into equity shares. At that time, you have to take into account the premium also. So keep it in mind. Because when you calculate the number of equity shares, this 20,000 debenture holders, that is 200 debenture holders, will get 105 rupees. So that will come around 4,200. That has to be converted into equity shares. But here in this question, you have to keep it in mind. So you have to read it very, very carefully. The terms of issue of debenture is 30% will be converted into equity shares. Only the remaining will be redeemable at premium. Not this also. So you have to calculate it at the nominal value only. These 30% will be converted into equity shares. Hope it's clear for all of you. So now going to the journal entry. First, they have given the journal entry for conversion and redemption of debentures, assuming that the company has already created. So now conversion also we are going to give a journal entry, and bank account we are going to sell this the moment the redemption is due on June 1. We are going to sell the that is DRR investment at par value. So bank account debit, we receive money for 2,10,000. Redemption investment account is for 14,000 debentures. It is 2 lakh, 15% is 2,10,000. Now the redemption becomes due. We have to always give a journal for due, then only make the payment to debenture holders. So 8% debenture account is due for 20 lakh, and premium on redemption is only for 14,000. Because only again I am telling you the remaining will be redeemable at a premium. So only for remaining debentures we are putting premium on redemption reserve, that is 70,000. So the total amount due to the debenture holder is 20 lakh 70,000. Out of this 6 lakh rupee, that is for 30,000 equity shares. We are going to convert this 6 lakh rupee into equity shares. 30% of this 20 lakh will be getting converted. So we are giving a journal entry for conversion. So debenture holder account will get debited, and this will be converted into, instead of making payment in cash, we are going to give them equity shares. Always the share capital will be credited with the nominal value, that is 10 rupees. The premium amount will go to securities premium reserve account, that is another 10 rupees. Hope it's clear to all of you. Now the debenture holders, we are going to make the payment to the debenture holders for the remaining amount. Total due was 20 lakh 70,000. Out of that 6 lakh was converted into equity shares. So now the remaining 14 lakh 70,000 is paid to the debenture holders. So now we have to do the rest of the work. Premium on redemption of reserve is a loss. So we have to write it off. Profit and loss. We have to write off through profit and loss account. Debit 70,000 to premium on redemption reserve account. Now the DRR has to be converted into transferred to general reserve account. So DRR account debit 1,40,000 we have already calculated. 1,40,000 here we have calculated 10% of 14 lakh. So that is converted into general reserve account. Hope it's clear to all of you. Thank you for watching my video. If you like my video, please subscribe and like this video. If you are not liking it, YouTube will not give this to other people to watch it. So if your like will make us to reach to so many students. So don't forget to like and comment also. Thank you for watching.